Welcome to IGTV. This is your special look ahead to the coming week, starting the 20th of November. And in just a moment, we'll be joined by Tasty Live's Anthony Batista, otherwise known as Bat. Let's get you through the main action-moving data points in the coming week first. We start off with China out with loan prime rates, and also the producer price index data out of Germany. Might be interesting given we've seen an easing of inflation out of the US. In Australia, the meeting minutes from the last RBA meeting will be one that will be passed, especially after the RBA stood pat. And it'll be interesting to see what they said about inflation there, whether more pressures are coming back. In the UK, look out for public sector net borrowing as we count down to December. Traditionally, let me get that out, in a time when many public sector and also travel-related sectors that are part of the TfL start going on strike ahead of Christmas. We also have the CPI out of Canada, and from the US, look out for existing home sales, the Chicago Fed National Activity Index, and the API crude oil inventories too. Midweek, we have CPI industrial trends orders out of the UK, along with durable goods orders from the US, and also initial jobless claims. Plus, look out for those crude oil data points, especially as we count down to OPEC's annual oil outlook piece that is at the end of this month. And from the Eurozone, the consumer confidence flash data. Staying with the Eurozone, we've got the manufacturing and services PMIs out of there. And from the UK, look out for the same figures. And it might show us that perhaps we're seeing some chinks of light coming through after both manufacturing and services have been relatively soft in the last few months. From Japan, the consumer price index will be key. And we've also got consumer confidence numbers out of the UK. From Germany, the third quarter GDP growth rate, that's the final print, it has to be said. And the IFO business climate data, that will be a bit more interesting because it gives us a sense of business morale there. From the US, it's the manufacturing and services PMIs. This is the flash data. So plenty for investors and traders to look at and chew the fat on. But it has been a really hectic week back. We've had, changes in interest rate sort of projections due to that PPI, CPI data. We have two wars still going on. Yes. Oil perking up after that sharp week-long sell-off. Where is the value? Where's the smart money headed?
Yeah, you are right. You mentioned a bunch of stuff already this morning. You have oil at lows. The market never seems to surprise you, right? Oil at 6-month lows. You finally got the U.S. dollar maybe taking a little bit of a breather to the upside when you got the pound going a little bit higher for the first time in recent memory. You got the Japanese yen catching a bid. You mentioned China at the top of your message there. Chinese stocks have been very, very weak. You also have Baidu that comes out with earnings on the 21st. Maybe that'll help the Chinese sector. I don't think so. Right now, China looks really out of favor. But yeah, the U.S. stocks are doing well. We had a downgrade in U.S. debt, and bonds went higher, interest rates went lower. So when you least expect it. It looks like the year-end rally has started early. And Santa Claus is coming to town is what it seems like right now. Volatility at lows for the year. If you didn't know that there were two wars going on, you wouldn't know it from the tail of the tape of the market.
Yes, and that's so interesting, isn't it? And actually, based on that, talking about volatility, because it's so low, is that an indication that perhaps there might be a rate cut on the cards in the first half of next year? Everyone's talking about when that rate cut from the US is going to come through and whether or not we're going to get that soft landing.
Yeah, I think if volatility is low, then it's bullish for the market. I don't think there's too many people that will disagree with that statement, and it's held true time after time again. So for me, I think a key on volatility more than anything else, and volatility is low, seems like the breadth of the market is well.
Now, stay with us, Matt. We'll come straight back at you. Let's just take you through the earnings front. It's really quite quiet, but there are still quite a few big names that are still to report on Monday. We've got Compass out with full-year earnings, and also Zoom Video, the darling during the lockdown period. AO World first half earnings there. NVIDIA, that's the big one, and Best Buy third quarter earnings. It's a big week, as you know, for retail, especially as we count down to Thanksgiving. HP also out with Q4 earnings. Sage, Britvic, Kingfisher and ThyssenKrupp also report on Wednesday, and on Thursday it's Mighty, Virgin Money and First Group out with their report cards. So that, I guess the key one to look out for here is NVIDIA, because it's seen so much volatility, plus it's got the concern stemming from those US sanctions. What's going on there?
Yeah, well, throw anything you want at NVIDIA, it doesn't matter. It continues to go higher, which is a little worrisome. I mean, I think it's healthy for stocks to have a little bit of two-way action to them. You know, if it goes in one direction for what seems like forever, that's usually not healthy. You could see here it's flirting with the market itself. You can see that NVIDIA is flirting with the high end of its range for sure. $6 expected range. If NVIDIA is right around here on the 21st, that means it has a 50-50 shot of making a new high.
Thanks very much, Bat, and we will see you again next week. To all our viewers, if you want to catch up with more analysis, do tune in to @Angeline Ong and @IGCom on Twitter. I'll be with you every weekday at 13:30 for Beat the Street to give you a heads up to the US trading day. And Jeremy Naylor will be doing the same at 7:30 for the European market open. Until then, this is IGTV.